Hello guys and welcome back to the channel. In today's video I'm going to be going through the trades I took this month during October 2022 and talk about the winners and losers with my thoughts behind each trade and how I came to returning a total of 15.53% this month. Just before I delve into this video though, I just wanted to give a special shout out to one of my students, Matty. He's been with me for quite a while now, but for the past 3 months he's really been starting to knuckle down. He's got a lot more consistent and the knowledge was starting to show, especially during September. We decided between us that we'd set him up on a live account, just deposit a small amount of money that he could afford and just take that next step in the learning process to really test his knowledge and the data he'd collected. So this was his first month, October 2022, and he managed to return a total of 16% profit, which is an outstanding percentage, actually more than I made this month, just about, but still, really good. This is now proof to him and other students that when you knuckle down and you remain disciplined and you keep gathering data and carrying on that momentum, you can really improve drastically. And obviously this month, having 16%, first ever month live, is really good. So well done, Matty. So now I'll go back into the video, and the percentage profit I made this month is based off my balance at the start. So obviously I'll note down what I start on at the start of the month, and then the end of the month profit is a percentage based off of that initial sum. I actually peaked at over 18%, but as any trader will experience, they don't always keep their peak profits, as you see other opportunities that meet your plan, meet your criterion, but then you end up taking a loss or two, and that's exactly what happened with me. It's just the way it goes. It happens every month. As long as your winners outweigh your losers, then that's all that matters, and obviously this month they drastically did. So the first trade involved in this month was actually covered in a video I uploaded about 2 weeks ago. So if you haven't seen that video, I would recommend watching it. It's basically where I made over $4,500 in under 15 minutes, which is a ridiculous amount of money to make in such a short time. The markets are clearly getting better now, and so I won't be going over that data again, but I do walk through my thoughts at the time and the analysis, so definitely check it out. It's a good bit of information and gives you an insight as to how I trade. And then touching on my final winners were the second and third trade I took this month, and they happened to be the following day. So in a 24-hour period, I took 3 trades, all end up winners, which obviously you can't complain at that. That's really good. And obviously that's what you want, that's what you work for, and obviously it paid off. So now I'll move over to the charts and we'll go over my analysis and thoughts on price action at the time, so you can gain a better understanding of how I came to take the trades and how they won. Okay guys, so now I've just hopped onto the charts and we will go through the first trade I took, which was on the 12th of October at just before 9 AM I think. Basically here we have a 4-hour demand area. The recent price action on the 15-minute time frame is bullish, as you can see here. So now the trend is confirmed bullish. I'm looking for an opportunity to take a long in the markets. Now I'm highlighting areas where we can look to continue this long. We have an area here, and if you actually zoom in on this, you can see that the price just about mitigates this area, and for me that means this would be the lowest point of entry. And I will just get up the premium discount tool that I use, so I go from the low to the high, and now we can see where price is in relation to premium discount. Okay, so there is slight demand here, but there's a reason why I don't enter from this. If we look at this candle here, I'll just remove this tool. You can see it wicked here and then pulled back slightly, and this push hasn't exceeded the high here yet. So what might happen at this point is there could be a reversal all the way to the downside, or it could be retracing. This is an irrelevant demand because it didn't create a new high. However, this did, so it could retrace here and then create that new high. That's what I'm anticipating because it's in line with the 15-minute trend. Okay, so now we have interacted with the demand area. At this point, I would have been on the 1-minute time frame looking for opportunities to enter the market for longs. So I'll play price forward until I see an internal break of structure. Okay, this is our internal breakup structure here. Okay, so now for the entry point for our long. This area here. So this is the pivot point where price really tested this area and then made the required volume to break structure internally. So this is the point where I want price to return to and then to shoot off. So because of the size of it and how my data collection has been going recently, I would use my Gambox tool and enter on the EQ of this area. So place my long position. Obviously I'll replicate the exact figures into my MetaTrader app and wait for the price to interact with it and get tagged into the market. So from recent data collection, I've been just targeting 5R at the moment with how everything's been going in the markets recently. Okay, you can see we've just been tagged in now. Slight little bit of drawdown, and then we hit our take profit for 5R. So that's my thoughts behind this trade. A little bit of drawdown upon entry, and then we shot off reasonably quick into our take profit for 5. Okay guys, so here is the second trade that I was talking about. It's actually on the same day as the previous trade I just went through, just during the New York session as opposed to London. So just a quick talk through price action. We've got this 15-minute IBOS here indicating short-term longs can be on the cards. And then we saw a bit of corrective price action, and we saw this nice candle to the downside on at 13.30. Okay, this grabbed liquidity here, and then we actually closed above, so demand held whilst grabbing liquidity as well. So this said to me that price was ready for another push up of some capacity. It meets my plan, so at this point I dropped down to the 1 minute to look for an entry model. We eventually got the 1 minute internal breaker structure here. Okay, this was the 15-minute large wick that was created, so the large push on the 1 minute to the downside, corrective price action, and we saw this huge push to the upside, slight correction, and then we broke through. Now this is called a V-shaped reaction. Okay, so we push down and then we react quickly and push back up. So now I'll look for a point of entry that I think is the most high probable. For me, this buy candle here is the perfect example. Why? Because we can see here price tried to push the downside, it struggled, and then we saw this huge push to the upside. So I place a buy limit on the EQ of the Gann chart tool that I use with a 2.5 pip stop loss. So all my back testing has told me exactly what stop losses to do and whether to enter on the EQ or open. And for now, it's a 2.5 pip stop loss and entering on the EQ. Okay, so now I'll place price forward. So we got tagged in at 6 minutes past 2. A little bit of drawdown. And we are targeting 5R, by the way. Again, this is through my back testing rules. So I'll play this forward and eventually we hit take profit. So this shows the importance of backtesting data. Okay, so I know to take profit at 5R. Now, most people or most traders using this technique or a similar one, when we hit sort of 4 or 5R, we'd not secure any profits, leave it running, aiming for higher profits of say 10%, 15%, and move our stop loss to break even. Some people wouldn't even move it to break even at this point. Now, if we play price forward here, we can see that we would have got taken out for break even if we didn't secure profits at 5%. And then if we play it slightly further, you can see if we didn't move to break even or secure profits, then it would have been a minus 1%. So this is the importance of backtesting data. I've talked about it on previous videos, and this shows clearly why it's important, so you know when to get in the markets exactly and when to get out. So I'll move on to trade 3 now. I'll show you one of the losses that I took. I took 2 or 3 losses this month as well, but I'll just quickly go through one instead of the other 2, just to keep the video short. Okay guys, so this is the 4th trade of the month that I took and that resulted in a loss. So I'll just quickly run through this. So overall the 15-minute trend was bullish. Okay, and we had an IBOS to the downside, and I was anticipating price to push back into this 15-minute demand, or at least the 4-hour demand here, because at the moment where price is, it's not actually reacting from any significant demand. So the idea for me was to continue a short-term sell into this area, or 5R, whichever one would get hit first. So the IBOS confirms the retracement to me, and we've kept moving to the downside. So at 2:15 during the New York session, we interacted with this 15-minute supply zone. So at this point, I'm dropping down to the 1 minute to try and find an entry model. So on the 1 minute time frame, we saw this nice 1 minute V-shaped reaction to the downside. Now my entry point was the extreme because we didn't have any sort of pullbacks to the upside. We didn't have any bullish candles on this leg of price. I was happy to set a sell limit on the EQ of the extreme supply zone with a 2.5 pip stop loss, and would be heading for a 5-hour profit, which actually lined up pretty nicely with a deeper demand zone within this sort of 1 minute bullish trend that we had overall. So play price forward, and we can see that we actually got taken out pretty quickly. It was only active for like a couple of minutes, and this is what happens sometimes when you trade the 1 minute. If it doesn't go your way, you will get taken out within like a minute or something like that. However, there is always lessons to losses, and a lesson for me was, if we look at the 15-minute time frame, okay, the size of it was only over 10 pips, only ever so slightly, but sometimes this means if price interacts with the 15-minute supply zone or demand zone and it's over 10 pips in size, it usually means there'll be a liquidation that happens the majority of the time through my back testing. So I should have really waited for this to then look for an entry. So if we hop back to the 1 minute really quick, you can see we got that liquidation, and then if we play price forward, we can see then we start dropping to the downside. So that was my lesson for this loss, is that, as I've said, there's always lessons to your losses, and you should always try and figure them out. So yeah, sometimes losses happen. It's part of the game. You can never be 100% knowledgeable on this. You can have a plan in place and stick to it, and you will still have losses, but all that matters is that you have more wins than losses, and your risk to reward is always relatively decent, so that if you have a loss period, your wins will always prevail. So that pretty much sums up this video. I've gone through 3 trades, 4 technically, 1 being in a previous video which I've gone through a couple of weeks ago. If you haven't seen that video again, I'd recommend watching it for your own sort of knowledge, and I hope you enjoyed this little walkthrough of my October's profits. I'll do the same again for November, and hopefully every month going forward as well, so you guys get an insight for what you can learn and the level you can become if you put the time and effort in. And if you were to take my course out, this is the kind of trader you can become. So I hope you enjoy this video, and I'll catch you on the next one.